You ever stumble on a crazy crypto rumor at 2 a.m. and think, nah, that can't be real? Well, imagine my face then when I found out that a BlackRock director once implied that XRP's fair value could be $32. Yes, 32, I know. I did a double take too. And that's exactly why I had to dig into this little late night mystery. Here's the setup. Now I'm scrolling through crypto Twitter and I see people buzzing about some BlackRock paper that values XRP in the double digits. Now, I've been around the block in crypto and I've heard my share of wild price predictions. Most of them are totally garbage, let's be honest. So my skepticism meter kind of hit the roof. But at the same time, the BlackRock name? Well, that's kind of like the Goldman Sachs of investing. They don't usually mess around with kind of tabloid level hype. Now, I'm kind of caught in this weird mix of doubt and FOMO-fueled curiosity. And I just knew that I wasn't going to sleep until I got to the bottom of it. So there I was, way past a reasonable bedtime, on a mission to find this mysterious XRP valuation story and see if it is legit or just another internet myth. Honestly, it kind of felt like hunting for a crypto Bigfoot, but instead of a blurry photo, I found something way better, an actual research paper from 2018, co-authored by a guy named Robert Mitchnick, who, plot twist, is now BlackRock's head of digital assets, and a Stanford professor, Suzanne Athey. Now that's some serious brainpower, and it's not every day that you see academic rigor and crypto speculation in the same room, right? Well, at this point, my curiosity is through the roof. I'm thinking, okay, they've got my attention. Time to put a detective hat on and see what's inside this thing. And trust me here, what I discovered was more enlightening than I expected. Now, before I spill the beans, let me kind of set the scene. The year is 2018. We're fresh off of the 2017 crypto mania. Bitcoin had rocketed up and crashed back down, and XRP, well, it shot up to about $3.80 in early January 2018 and then plummeted to around 50 cents by mid-year. People were scratching their heads. The whole crypto market was a fraction of today's size. Bitcoin was chilling at around $7,000. XRP was 50 cents. Total crypto market cap, maybe a couple of $100 billion, tiny compared to now. And in that kind of environment of confusion and volatility, these two brainiacs, Athey and Mitchnick, kind of put together one of their first real attempts to figure out a fair value for crypto assets. Not a price prediction exactly, but a theoretical fair value if these things actually got used the way that we all hope. And hidden in there was the magical XRP number that kind of folks like me would obsess over years later. So I tracked down their report, which felt a little bit like finding an old treasure map. It's titled something pretty dry, like a fundamental valuation framework for crypto assets. It's not exactly clickbait, but hey, right? They were writing for economists, right? Not YouTubers. Now, I kind of cracked it open and I pictured this. I'm literally reading a PDF from 2018, like it's a bit of a time capsule. Now, the first thing that I noticed, this isn't some fluff piece or one-page blog post. No, it's got charts, formulas, references, a full-on research paper. At that moment, I knew, all right, this is the real deal. So I poured myself another cup of coffee because my inner nerd is ready to jump on in. Now, these authors approached valuing Bitcoin and XRP in a way that I'd never really seen before, treating them as if they were currencies, or really like monetary assets rather than stocks or commodities. Now that sounds a bit obvious, right? Maybe, like duh, but Bitcoin is a currency. XRP is meant to move money. But back then, so many analysts were busy comparing crypto assets to stocks, right? PE ratios, no, right? Or the commodities, digital kind of gold analogies. Now Athey and Mitchnick said, nah, let's step back and think of Bitcoin and XRP as form of money, right? What money, or at least what gives money value, is usage. Now, money is only useful because you can spend it, move value, right? And because you can save it, store value. So they kind of built a model around those two big use cases, right? Transactions and store of value. All right, now here comes a tiny bit of math. Now I promise I'm going to keep it painless. Their model had 8 main inputs, like 8 ingredients in a secret sauce, right? Things like how many transactions will happen on the network, how large on average, how long do people hold on to their coins before moving them again, how much total wealth might eventually be stored in this asset, plus supply factors like how many coins exist and will exist. For Bitcoin, they assumed 18.2 million in circulation by the mature stage. For XRP, they considered the full 100 billion supply, though noting only 39.2 billion were circulating at the time and the rest was locked in escrow. They also used a discount rate, basically a fancy term, finance term that is, to account for risk and the fact that $1 today is worth more than $1 tomorrow. And they estimated how many years it might take for crypto adoption to stabilize. They were kind of eyeballing 12 years for Bitcoin, maybe a similar kind of decade plus timeline for XRP. Now, deep breath. That was the nerdiest part, I swear. Now, the cool thing is that they were basically quantifying hope. How do you put a number on the chance that XRP becomes a major global payments currency? Now, these two actually tried to do it with data and spreadsheets instead of crystal balls. So, what numbers did they come up with? Well, this is where my eyes basically kind of bulged out. They ran their models for both Bitcoin and XRP. So let's start with Bitcoin, since it's the big daddy and it kind of sets the stage. Now, under their assumptions, remember, this was 2018, looking ahead to maybe 2030. They thought that if crypto really took off, Bitcoin might process anywhere between 5.6 billion to 28.2 billion in transactions per day. So that alone tells you that they imagined a world where Bitcoin is moving a lot of value around. And for that store of value angle, they considered Bitcoin capturing a slice of global wealth, similar to kind of gold's role. Now, if Bitcoin became king of digital gold 2.0, well, they estimated between 1.1 trillion and 1.6 trillion could end up stored in Bitcoin longer term. Big numbers, right? So when they ran all of that thought kind of through their model, discounting future value back to the present and all of that jazz, they got to a fair value for Bitcoin of around $45,000 to $93,000 per BTC. Mind you, at the time that Bitcoin was only $7,000, so even $45,000 sounded like a fairy tale for most people. But here is the twist. The authors didn't assume this rosy scenario was guaranteed. They actually said, hey, maybe only about 30% chance that Bitcoin ever achieves that kind of full adoption. Now, if you factor in the possibility, the expected fair value, like the weighted by the chance, it actually came down to around $13,600 to $28,100. Sort of like, well, Bitcoin might end up around $20,000-ish if it kind of half succeeds. But if you really kind of want to see it succeed, it kind of could be even higher. Now, reading that in 2018 was pretty wild, right? 13K to 28K Bitcoin felt optimistic, but not totally bonkers. Bitcoin had hit almost 20K in 2017's run after all, right? But $45,000 to $93,000 as a scenario, well, that raised some eyebrows. Now, I remember thinking, wow, even conservative academics see a path to almost $100,000 for BTC. Little did they know, right? Because fast forward to today, and Bitcoin is around $116,000 after topping out at $124,000 recently. So we're literally above the high end of their fair value range. The future had some tricks up its sleeves. Maybe Bitcoin, outrun their model thanks to things like the kind of paper that couldn't really kind of maybe fully predict, right? Like Elon Musk tweeting, or companies like MicroStrategy gobbling up coins, or the whole Bitcoin ETF, saga. So the word doesn't, at least the world doesn't always follow these models exactly. Sometimes it says, hold my beer, and just goes even bigger. Okay, now on to XRP, the star of this story. So if Bitcoin's numbers made me kind of raise an eyebrow, XRP's numbers made my jaw drop, right? These researchers basically said if XRP becomes as important as we think it could, by 2030, it might handle $190 billion to $556 billion in transactions per day. And yes, that was billion with a B and D with a daily, right? Now, I had to kind of reread that to just make sure that I wasn't adding some extra zeros, right? They were picturing a future where banks, corporations, maybe even your average person are using XRP to move money across borders consistently. Remittances, corporate transfers, forex trades, all of that could funnel through XRP if it truly hit the mainstream of finance. Ambitious? Absolutely. Impossible? Not in theory. Right? Those markets are gigantic, and it's just that getting even a slice of them would actually be a rather huge win. And for the store of value side of XRP, well, they went with an interesting assumption. XRP could capture between 15 to 30% of the total wealth people held in crypto as an asset class. So not 15 to 30% of all wealth in the world, that would probably be insane. Just kind of the crypto pie. So still, by 2030, they might have imagined the crypto pie itself being pretty enormous. In raw numbers, they said that that could mean $1.6 trillion to $3.2 trillion stored in XRP. Think of people, maybe companies, maybe even institutions holding XRP as a reserve or for a long-term asset. Now, not just a kind of transfer tool. It's kind of ironic because XRP's primary design is for fast transfers, not for hoarding. But if it became vital infrastructure, lots of people might actually want to hold it too, like banks needing liquidity on hand. So we plug those huge transactions and storage demand figures, divide by the supply, discount it back. They used a higher discount rate here, 8.5%, presumably reflecting more uncertainty around XRP or maybe a longer time frame. And voila, the model spits out a fair price for XRP between $6.37 and $32.91. So when I saw that upper number, I literally said, wow, out loud, to an empty room, of course, maybe just a camera or two. Now, a $30 XRP. Now, that not only, I say, and not for some kind of rando or from some kind of rando person on Reddit, but from a well-researched analysis. Now, I cannot lie here. The XRP holder in me kind of felt the jolt of excitement. Like, this isn't just hopium. Someone actually did the math. Of course, the report immediately kind of brings us back down to earth by saying, look, that's a theoretical peak scenario. They gave XRP only about a 25% chance of actually achieving all of those lofty usage numbers. So if you kind of weigh that, at least weigh that in, that possibility, well, their kind of expected fair value for XRP was more like $1.59 to $8.23. In other words, maybe just a few bucks, which, as it turns out, was pretty close to where XRP has most recently been in the last few months. Still, seeing that $32.91, in print had me kind of daydreaming just for a second, like picturing my XRP bags at 60x their 2018 value. What a world that would be. Now, I've got to pause here. This is one of those moments where I realized just how far crypto has come and how unpredictable it still is. So imagine reading this back in 2018 as an XRP fan. On one hand, you'd be thrilled that some legit study said, hey, XRP could be worth $32 under the right conditions. And on the other hand, they also said, more likely just a few bucks unless it really dominates. Now, it's a huge range that all depends on real adoption. Anyway, at this point in my late night sleuthing, I've confirmed that the big number was indeed true. There really was a BlackRock guy's paper that valued XRP in the double digits under certain conditions. Mind blown. Kinda, yeah. But the story doesn't end there, because I immediately wondered, okay, well, how does this theoretical stuff compare to what's actually happened over the last 7 years? Did reality follow the script? or did it go off on a wild tangent? Now, I know what you might be thinking. Is there any of this actually realistic? Or where do we actually stand relative to these predictions today? Well, believe me here, I had the same questions in mind. So let's fast forward to 2025 and do a reality check on these fair value scenarios. But first, a quick reality check for us here and now, because I've got to say this to keep things all above board. Now, this might just shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video is for entertainment and educational purposes only. Alright, so we had to get that out there. Don't go selling your house for XRP because some study from years ago said $32. Okay, be cool? Let's get onto it. So, 2018 gave us some interesting frameworks of fair values. Now it's 2025, 7 years later, and the crypto landscape is, well, mixed compared to those projections. Some things overshot and some undershot. So let's start with the big picture numbers. Back then, crypto's total market cap was just a few $100 billion. Today, we're around $4 trillion. Massive growth. Bitcoin now trades at around $116,000 per coin, which is more than 15 times higher than in mid-2018. Now that's actually above even the high end of what the paper's model said was fair value for BTC's success scenario. So in a way, Bitcoin exceeded their expectations, at least price-wise, possibly because adoption and investor interest went even more bananas than they actually assumed. XRP, on the other hand, is about $3 today, so that's roughly six-fold increase from 50 cents in 2018. Hey, a 6x gain in 7 years isn't bad in the normal world, but in crypto terms, that's relatively modest, especially next to Bitcoin or some other altcoins that did way more. And crucially, $3 is nowhere near that $32 success case. It is, interestingly, within the paper's expected range value, or value range of $1.59 to $8.23. So arguably, XRP's current price kind of is on track, at least tracks the kind of partial successful, but not kind of world-conquering outcomes within their model. Our glass maybe is half full kind of view here, that XRP is roughly where the cautious analyst in 2018 might have expected if some things went right, but not all. Glass half empty, the big dream scenario hasn't materialized yet, at least. So, why didn't XRP soar towards that upper range? Well, let's talk about that, or at least what went differently maybe than from those assumptions. Reason one, regulation, right? The SEC saga. Now, if you followed XRP, then you know exactly what I'm about to say. In December 2020, the United States Securities and Exchange Commission hit Ripple, that's the company closely associated with XRP, with a lawsuit, claiming that XRP was sold as an unregistered security. You can cue the dramatic music. Now, this was a bombshell that seriously hampered XRP's progress for a few years. Almost overnight, major exchanges, especially in the United States, like Coinbase, delisted or suspended XRP trading. Some partnerships and projects involving XRP were all put on hold. The uncertainty was kind of like a dark cloud over XRP for a long time. It's hard to kind of overstate this. While the rest of the crypto market had a roaring 2021 bull run, XRP had this kind of anchor tied to its leg. Now, as of 2025, a lot has happened. There was a big court ruling in July of 2023 that declared XRP itself is not a security when sold on exchanges. This, a partial win for Ripple and XRP holders. And that allowed relisting of, and of course, a price pop at the time. But the case wasn't fully over, and other assets are still, of course, being hashed out or even appealed, right? But good news is that the appeals have been dropped. Now, my point here is that those early years, 2021, 2022 especially, where kind of XRP had kind of been expanding and being adopted more, it was instead kind of fighting legal battles and getting kind of shunned in the biggest kind of potential market. the United States. Now, the model from 2018, of course, didn't foresee, oh, by the way, there will be this massive lawsuit that stalls adoption. So that's a big factor why reality didn't quite hit the optimistic markers. Reason 2. Adoption versus expectation. Mitchnick and Athey's kind of model effectively assumed that Ripple's technology, like ODL, the on-demand liquidity, Ripple payments now, using XRP would basically take the world by storm in global payments to reach hundreds of billions in daily volume. Now, XRP would need to be kind of like the go-to bridge currency for banks, remittances, currency swaps, you name it. Now, ODL has grown. Don't get me wrong here. Ripple has a network of partners and certain corridors where XRP is being used under the hood to move funds quickly. But can we say XRP dominates global remittances or corporate settlements in 2025? No, not at that scale. SWIFT and traditional banks are still handling the bulk of international transfers, and competitors, even stablecoins, are eyeing for that space too. Now, interestingly, Ripple, the company, also diversified its focus over time. They started working on CBDCs, these are central bank digital currencies, and helping governments, they kind of facilitated stablecoins on the XRP ledger and even expanded into other crypto services. All great stuff, by the way, but it does mean that not all of Ripple's energy was actually pushing XRP into every bank and payment providers' hands. So the result, while XRP usage has increased since 2018, it's nowhere near the XRP rules the world scenario needed for that $32 valuation. Meanwhile, Bitcoin outperformed many expectations because it's got a different kind of adoption. Institutional and corporate buy-in. The model did consider Bitcoin as a store of value like gold, but I wonder if they anticipated just how quickly big players would actually jump on in. So let's think about it. In the last few years, we saw companies like Tesla and MicroStrategy put Bitcoin on their balance sheets. Huge funds and asset managers started pushing for Bitcoin ETFs, and generally the narrative of Bitcoin being digital gold went, well, mainstream. That flood of demand helped Bitcoin's price rocket beyond what a pure transaction and store of value usage model might actually suggest by 2025. Essentially, Bitcoin became a macro asset, a hedge, even a FOMO asset for institutional investors. XRP, because of the lawsuit and its different use case, didn't see a comparable wave of Wall Street money pouring in. Not yet, anyway. So Bitcoin hitting $116,000 while XRP is at $3 has a lot to do with different narrative successes too. Now, one more thing or crucial point, the paper itself noted that these were not literal price predictions. They were more like what-if calculations, as in, if X and Y and Z all happen, then maybe XRP could be valued at around $32. Real life kind of throws some curveballs. X, Y, and Z didn't all happen, or at least not yet. So we shouldn't view $32 as a broken promise. It was actually a conditional target. It's a bit like a kind of fitness plan that says if you run 5 miles every day and only eat salad, well, you could lose 30 pounds in 6 months. Now, if you only run occasionally and still eat some pizza on the weekends, you're not going to be hitting that 30, right? Similarly, XRP didn't get full superstar athlete treatment adoption-wise anyway, so we can't really expect the full $32 result. Again, at least not yet. Now, this whole journey of verifying the BlackRock XRP story got me thinking beyond just the numbers. First, it was a reminder to always check the source of wild crypto claims. This time, the claim had some substance, a real research paper, but so often it is just hype. So I'm glad that I dug it up, because whether you're an XRP fan or not, it is fascinating to see a framework that says, here's why this coin could be worth X, instead of just throwing darts. Second, I kind of rekindled some optimism in me about XRP's long-term potential, but in a kind of nuanced way. Like, I've always kind of liked XRP for what it tries to do, make moving money fast and cheap globally. Reading this analysis was like, hey, under the right circumstances, the sky's the limit. But it also screamed, buddy, look at the mountain XRP has to climb first. It's both a pat on the back and a reality check for the XRP community. Now, we all love to joke about when Lambo and seeing some crazy price predictions on Twitter, but the truth is that those numbers will remain fantasy unless a whole lot of real-world adoption happens. It also made me appreciate that even back in 2018, some very smart people in high places took XRP seriously enough to analyze it deeply. I mean, Susan Athey was on Ripple's board and is a respected academic. Robert Mitchnick went on to spearhead digital assets at a major asset manager. These aren't your typical XRP to the moon voices. So it added credibility to the idea that XRP isn't just some random token. It was designed with a big promise, and it caught the attention of big thinkers. Now that said, even those big thinkers knew that it was a risk, hence the 25% success probability in their model. Another theme here is patience. I mean, I know, not a popular word in crypto where everyone wants to get rich yesterday. But let's think about it. In 2018, right, they were looking 12 years ahead to 2030 for this stuff to kind of really play out. Now we're in 2025 now. The game isn't over, and maybe XRP's story is more of a slow burn than a quick moonshot. If by 2030 XRP is heavily used and maybe sitting at, I don't know, who knows, $10 or $20, well, that would actually kind of line up with some of the fair value ideas just taking longer to actually manifest. Or maybe something totally different will happen. Maybe CBDCs steal some thunder, or maybe a miracle and suddenly banks en masse adopt XRP. The future can always forge a new route. And by the way, this whole saga was way more fun to explore than many others. Now, I had hopped into our free educational Discord server to share what I had found, and you should have kind of seen some of the discussions. Some people were ready to double down on their XRP bags after hearing about the $32 valuation. Others were like, I'll believe it when I see the volume getting anywhere close to those levels. Healthy debates, lots of good insights, and honestly, if you're not in there yet, you need to join us. It's free, we chat all things crypto, we share knowledge, and occasionally even geek out over things like the 5-year research papers at 3 a.m. in the morning. It's a good old time. And since I'm in kind of plug mode, here's a quick thank you for all those people who have supported the channel, especially via the affiliate links. Now, I've partnered with a couple of crypto exchanges that I actually do use. For instance, I sometimes trade on Blowfin, and I've got an affiliate link for Blowfin that is in the description down below. So if you do sign up and trade with it, it kind of helps the channel here at no extra cost to yourself. The same deal with BitGet. There's an affiliate link down there for BitGet as well. Now, using those links is totally optional, but it is a win-win, right? If you're looking for a place to trade and want to support my channel and content here. Plus, it helps me fund these kind of coffee-fueled research sessions when curiosity strikes. Much appreciated to anyone who does use those links. You're the real MVPs. All right. Nearly at the end of this saga, so what is the big takeaway here? Well, for me, it's that value in crypto ultimately comes down to real utility and adoption. The paper basically quantified a dream scenario of utility for XRP. Now, we're not there, but the blueprint is kind of laid out. So when I evaluate XRP's future now, I'm asking, are we moving in that direction? Is ODL, or Ripple Payments, volume actually growing? Are more institutions holding or using XRP? Now, it gives me a framework beyond just number go up, right? And for any project, not just XRP, that is a good question. What would justify a much higher price? Fundamentally. So if you can't answer that, then prices or high prices will likely remain just a fantasy. At the same time, it's also a reminder that unexpected things, good or bad, can change the game. Who imagines seeing the SEC lawsuit would slam XRP? Or conversely, who imagined in 2018 that major institutions would be filing for Bitcoin ETFs and Bitcoin would hit 6 figures? Right? Crypto is full of surprises, so I'll keep my mind open. Right? Maybe XRP's path to success looks different than maybe the paper's assumptions. Maybe, I don't know, it would be 30% of all crypto wealth stored in it. But perhaps CBDCs using XRP's ledger could actually drive value. or in other kind of use cases that we haven't maybe even thought of yet, right? The future can always forge a new route. So, was the BlackRock $32 XRP fair value story real? Yes, 100% real. A director-level analyst and a Stanford economist really did the math and said, under the right circumstances, XRP could be worth in the high 2 digits. Does that mean XRP will definitely hit $32? Nope, right? Not unless all of those assumptions actually happen in the real world. Verifying this myself made me a little bit more optimistic about XRP's ceiling, but also more aware of the gap between potential and reality. It's kind of like knowing that there's a blueprint of a dream house. It's exciting, but you've still got to build the thing brick by brick. So, in a way, I kind of feel like I went on a little side quest in the grand crypto adventure. Right? I hunted down a rumor, I found the treasure, aka the facts, and I came back with a story and a lesson. And I hope it was eye-opening for all of you as it was for me. Right? It's adventures like these that remind me why I love exploring the crypto space. There's always another layer of insight hiding behind price charts. Now, if you're willing to do some digging, that is. So, if you've enjoyed this adventure today, make sure to hit that like button and subscribe, so I'll see you all in the next one.